Hi everyone, welcome to the webinar, and thank you as always for your patience. We're practically on time, only a minute or so. There's really an awful lot going on at the moment, which is great, and from all sorts of perspectives. So let's crack on straight away. But before we do, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't even think of using money that you cannot afford to lose. If it's the first time that you are joining us, this is me, as my husband David sitting next to me, although he's not next to me, he's actually opposite me at the moment. We're not at that trading station, we are at another trading station. And in this session, for those of you, as I said, who haven't been along before, we'll be looking at the indices. I've actually got a Forex pair that I want to show you because it's a continuation of the euro yen that we were looking at in the previous webinar. Some of you I know were with us then. A really important pair for the purposes of risk. And we'll be looking at the charts through the prism of volume price analysis with our quantum trading indicators, specifically the ones from NinjaTrader. I've got Ninja 7, David is running Ninja 8. And the way we approach our trading, really, it's whatever you trade, whether it's Forex, whether we're looking at the indices here, you really do have to look at the market as a whole, in the sense that holistically, whatever is happening in the instrument that you are looking to take a trade in, you can be pretty certain the drivers, some clues about what is likely to be happening are going to appear in other markets. And today it's very much the bond market, what's it's signaling, and also you can pick up similar clues in Forex. And for Forex traders, we say it's the reverse. You're trading Forex, you've got to know what's happening in bonds, you've got to see what's happening in equities and commodities. They're all interconnected. And this is actually a slide from our Forex trading program, and it's what we call relational analysis. In the program, we talk about technical analysis. We all know technical analysis, fundamental analysis, which we understand as well. But there is what David and I have christened relational analysis, and it's something we have put together as a view of how the market works and how it operates. So let me just come out of that straight away, because we need to look at the charts. Before we do so, while I sort of organize my tabs up here to go through what I want to be looking at in terms of fundamentals, and I've got a couple of sites that I'd like to recommend to you for some really good background information. Let me just pass over to David.
Thanks, darling, and a very warm welcome to you wherever you are in the world. I hope it's warmer where you are than it is here, because it's very chilly and not very pleasant, very grey and miserable. So I hope the sun is shining wherever you are in the world, and a very warm welcome. If this is your first time, just adjust my microphone, apologies. If this is your first time, we run as a two-hander, Anna and myself, and Anna's on NinjaTrader 7 and I'm on NinjaTrader 8, and I can see we've got quite a few regulars in the room, but if this is your first time, we're happy to answer questions. If you just drop your question in the chat box, we'll answer it there. If it's a longer question, we will answer it on air. And just to explain about the licensing for NinjaTrader, when you do invest in the quantum indicators, it's your choice whether you run on NT7 or NT8. It's not a differential license, so whichever your preferred, I was going to say poison, but whichever is your preferred version of the NinjaTrader platform, you can just select the one that you choose, and away you go. And you can flip-flop between the two as and when you choose. I'm going to pass back to Anna, and we will get going.
Obviously, we've had the Fed this week. We've had this the sell-off in the well, we haven't had the sell-off yet, but the sell-off is carrying on. Is happening in the indices as we speak. The Fed was very dovish. Unlikely to be further interest rate rises this year. They've really rode back on the kind of language that they were using at the beginning of last December. If you not the beginning of December, 19th of December meeting, when the market really did take a swoon, because they wanted to, they thought the economy was wasn't overheating, but it was sufficiently strong to be able to take a regular series of interest rate hikes. And as we all know, that's completely reversed, and it was reversed even further at this FOMC that we had on Wednesday. Now, quick look at the economic calendar, everything has come in. We've had the flash manufacturing PMI for the US. It's come in slightly below expectation. And what we talked about in the Forex market in the previous webinar is that we had a similar data release for Europe, and particularly for Germany. And what we said, the reason why there has been this, certainly the strong sell-off in the euro, and it's generally sort of risk on at the moment, is because when you look at fundamental releases, you really have to see them in the way that you would look at a chart. You look at a trend. You look at you look to see whether there is some, are we at an inflection point for that particular release? How is that release going to be perceived by the markets? And what is the reaction going to be to that release? Now, the PMI. The manufacturing PMI, as far as Germany is concerned, is hugely important, because their economy is purely based on exports. Cars form a huge part of those exports. And if you read the financial press, there's also this issue with tariffs. Donald Trump has been threatening to put additional tariffs on German cars. Well, that's not going to be very good news for the German economy. But this is the PMI, and as you can see, it has actually been falling. And what that means for a currency is that it is considered bad for a currency, and a currency will then sell off. And it's really the point at which that is likely to happen. Now, for the PMI, 50 is the inflection point. Above 50, as you see here, it's increasing, going up and up. That is good for the economy. When it's below 50, things are really not looking very good. Now, when we compare that with, say, have a look at the flash PMI for the United States, you can see here, this is only given what they call a low impact compared with Germany, and that is because it's how it sits into the economy. I know the US is a manufacturing economy, but it doesn't depend on it as much as Germany. But let's just compare like with like on this occasion, and we can see here this is the PMI for the US. Now, it is kind of falling, but it tends to pop back up again, and so it can be a little bit unclear, but it's not at 50. 50 is the key level for this release. Here in the UK, manufacturing is not a huge part of the economy, it's services. So when you see the services PMI for the UK, that is that's going to have more of create more of a reaction in the market. Now, in terms of trading today, that's it. All the news is out, and it's really a question of the market now is going to try and absorb what has been happening today in terms of these releases, what happened on Wednesday, and trying to make a sense of and try to have a narrative behind that. And looking forward, of course, here we've got the the chaos that is Brexit. And what traders will do is they will then look at other markets to give them a kind of clue as to what is likely to be happening today, but also more importantly, moving forward from Monday onwards. And this is where really you have to look at, say, something like the bond market. The bond market. These are the yields. If you haven't got them on your broker platform, you can go over to investing.com, and you can see here the yields are falling. Yields fall because there is fear coming into the market. When yields fall, then the indices and equities are going to be falling as well. And in fact, I think on Forex Live, what they were saying is it's because the yield curve is also inverted. Now, that has a huge implication for inflation, and also what is going to happen to gold. you know, gold is used as a hedge for inflation, but there isn't any inflation. You've got no growth, you've got no inflation. You're going to get something called stagflation. And in fact, in some ways, the economies that we're seeing, certainly European economy, is the danger is that it really turns into Japan, where in Japan, is it 20 years since their crisis, they blew up because of their of the housing. The housing just went ballistic. I think at one time was the Royal Palace, the value of the Royal Palace in Tokyo was worth more than San Francisco. It was just absurd, and it's 20 years, and they really haven't managed to get any traction out of it. Doesn't mean life stops, life goes on, but it has all sorts of implications for trading and, of course, investing. So that's what we've been looking at. We were looking at at bond yields, and talking about bond yields, I said about a nice resource. This I mentioned it in the Forex webinars. Chuck Butler, who writes for FX Street. I know it's a Forex a site, but Forex traders more and more are realizing the importance of having a look at, you know, cross-market, doing cross-market analysis, you know, as part of their research into, you know, what is happening on a daily and longer-term basis, you know, to get a picture of the market landscape, as it were. He's a great guy. I read this for the first time this week, and I was absolutely knocked out by it, because I love writing like this, slightly sort of subversive, as it were. And he's been around a long time, as he says. He's been in the markets for 45 years as a bond trader, and he's been in the market longer than most bond traders, not even 45 years old. So he certainly knows what he's talking about the 10-year Treasury. That yield has gone down. I think it was 2.59 when he was talking. Let's have a look what it is now. The 10-year is down to 2.439. That is a big move for the bond market. The bond market is it's the most important market. It's the most important of the capital markets in terms of what it tells us about the cost of money and also sentiment. So that's fallen even further. And so he says, what that tells me is the bond guys are not believers in the US economy, and they see the Fed cutting rates sooner than later. I know. You're wondering how I got all this. But anyway, he knows. And that's what I urge you to do. You really have to have this sort of holistic picture of what is happening out there. And I think also, here we are. There we are. The bond market is flashing its biggest recession signs since before the financial crisis. Now, VPA is also giving us some tremendous clues into what is happening on the longer term charts for the indices. And I know, Dave, I think what was it, the NASDAQ we looked at the other day? Yeah. Was it the NASDAQ? We wrote a post about it on the NASDAQ. Things, you know, everything's coming to quite a very critical point, if you like, in the price action, and certainly VPA will help to explain that. Finally, before I move over to David, this is the chart of the euro yen sold off. This is the 8-hour chart. This is the session for London and Europe. You see this huge fall lower, triggered the volatility. We did have a slight retrace into the spread of the candle. And when we were in the webinar earlier on, we really wanted to see whether that would carry on further. And what I said was, certainly based on the daily chart, there was scope for some further downward momentum because the move in the euro has been over. The market has absorbed the news about the euro. Because this is the euro yen, and you have the yen as the counterparty currency, any move lower was going to be driven by sentiment. What was going to happen in the indices and the bond market as well. So yields have gone down. Indices are falling as well, and it's no surprise to see a continuation in the euro-yen pair. So, because as currency traders, as forex traders, in fact all traders who come in at different times of different sessions, when you see huge moves like this, what do? Do you say, well, do I try and capture? Is it going to go down any further, or do I wait for a bounce and a reversal? Because often you do get a bounce and a reversal. And in fact, I was targeting this support line here at about 124. In fact, it's gone through, and the daily has now triggered the volatility. It hadn't triggered that in the previous session because it wasn't outside of its average true range at the time. And there was also a really nice Some nice VPA lessons here as well. We've got this, what Dave refers to as sort of catenary price action. You've got up candles, you've got not a lot of volume, and you've got wicks to the tops of the candles. These are all clues as to what is likely to be happening next. And when you are in a situation like this, never mind whether it's the euro, yen, or any other other instrument, you've had a big move one way or another. What do? You know, clearly you've missed it. And this is where you have to look at levels. How you define the levels, you know, what methods you use, whether you use a Fibonacci or you use just, I can't think of Elliott wave or whatever it is, it's up to you. We use the Camarilla protocol. This is actually the hourly chart for the 60-minute. And this is where this pair was trading. It had broken through the S4, hugely important, and it looked as though it was going to sort of congest here. The first target was the S5, and in fact, it's moved even further beyond to the S6, and now that's looking very weak. And you know, where's it going to head next? Well, we just have to keep going up the time frames to try and get some levels where this fast-moving pair is actually going to find some kind of base. What I also said on the faster chart, the levels on the 60-minute chart are levels that have been valid all week. They're going to refresh on Monday. On the faster chart, say the 5-minute chart, we are way below now the S6. This is, you know, this is just at the moment, this is in free fall. And to help us further, we have the yen index here. As the yen climbs, you know, traders don't want to take any more risk, so we have that as well. So we have all these, you know, so we have all these additional instruments, markets that we can look at to help us in our trading. And finally, you know, to try and take some kind of trade, take either as an entry in the dominant trend, which is clearly to the downside. The best way you can do this is using a non-time-based chart. And here we have the renko. This is the little attempt to rise, this little pullback that we have here, but really it is relentlessly red, as we can see here with the trend monitor. And the levels are painted on the charts. So as they are broken and go through, where it's going to stop, that's, you know, what do? We go up to, let's go out to the, you know, the daily's had this huge move. It's also approaching a low volume node. If it gets to, I don't know, 123.50 and beyond, then that move through there is going to be pretty quick. Let's go on the weekly, because we are at the end of the week. Where are we here? Well, we've gone through this sort of support here. I think that's about 124.50. That was the 124.50 level. Again here, who knows? Up on the monthly, let's see what the monthly is saying. And again, I would say that that's a pretty good price objective here, which is about, let me put the data thing on, it's probably easier, the data box on it. Here we are, let's have a look. There we are, here we are, one price, 123. So, you know, that is a clear level of support. So that's the euro yen. I'm going to be moving over probably to the YM. I'll look at gold as well, see what's happening in the precious metals. I'm just going to pass over to David, and he can tell you what he's been looking at in the meantime. Is that okay, hon?
No. I've been looking at the sea of red. Wonderful. My favorite color is red. Always has been, always will be. I have a bias to the short side, in case you were not aware of it. And days like this are just, well, manna from heaven, money-making days. These are the days to make big money and just get stuck in, because they make up for all those days. And we've sat here in webinars where the price action is just relentlessly sideways and continues that way until the end of the session. And today's been fantastic. Just heavy selling. Yes, you've got pauses in there. But if you know what you're doing and you know what you're looking at, Anna's waving. Okay, let me just pass back to Anna for a moment. I'll leave the screen up. This is the YM on multiple time frames, but I'll leave that up and we'll flip over to the ES as well.
Sorry, there was one thing I forgot to mention, something I read earlier on today, and that is the VIX. Just have a quick look, because every time we come, we always have a look at the VIX. I got terribly excited about what's happening in the bond market, and it doesn't normally elicit much much of a response from most people. But the VIX, it's actually up to 16. I read something quite interesting, and at what level sort of the fund managers and the people who manage huge sums of money, what level of VIX do they look at that would give them cause for concern? And I just read this quite randomly that 15 where we are now, they pay very close attention to it, because they think it's too complacent. Things are just, you'll find when you look at the daily charts of the indices, and we'll look at them as well, that David will show you, is you can see the price is crawling up, spreads are narrowing. It's really, really grinding higher, and that grind drives the VIX lower. It even got down to about 12 at one point this week, didn't it, David? It got down, you think, right, the lower it goes, the more complacency is coming into the market. As soon as it starts to rise, gets to about 13, 14, 15, something is likely to happen. And a lot of traders this time possibly to look as a potential sell. And of course, you've got VPA, you've got chart patterns, you've got all the other things that you would pay attention to. But the VIX, the bonds, and at one point, I also meant to tell you, at one point, some time ago, the euro yen was a great proxy for the S&P 500, wasn't it? They were very, very heavily correlated. It hasn't happened for some time. Mostly people look at the dollar yen, but the euro yen was a great correlation for the S&P 500, but not so much now. But today it's been driven on both sides. We've had huge moves because of the euro, huge moves now because of risk sentiment. David, sorry.
No problem. Just move that out of the way a little bit. There we go. And we're still moving lower. It's been pretty relentless, not entirely without pause points, but then, that's part and parcel. You expect that. But as you scan your eye, this is the 3-minute, the 5-minute, the 10-minute are on the YM for June. The trend monitor is bright red right the way throughout the piece. Down onto the 30-minute, exactly the same. We're starting to move away from the volume point of control down here. Excuse me. And as we do, then what we're moving down and deeper into is an area of light volume here. So, if we get down below, let's say 25,620 odd, then we're pretty much cleared away down through 25,600 and possibly more. When you look at the price action on that chart, just looking at it, when you see these efforts to rally, we had the volatility, trading inside the volatility. You've got efforts to rally, falls, effort to rally, fall, effort to rally, fall. Looks as though we've got a minor one developing here if it maintains that shape. But it's very weak, very fragile at the moment, and that's reinforced by the volume profiles as well. Just pulled up the renko, and exactly the same story. The trend monitor here, you can see how it transitioned, but it never actually got into bright blue. It went through into some phases as we saw this little minor rally develop. The trend dots change first. They always do because they're very close to the price action. The trend monitor, as you can see here, starts to change once this trend starts to roll a little bit. Then we're back into red. There's a little bit of blue comes in as we're in this congestion period here, and then we're straight back out into dark red and back into bright red again. And you'll see that all the time. You can see it here, this minor rally. Trend dots go gray in the transitional phase. Then a couple of blue ones as the market tries to rally a little bit off the low there, off this platform of support that's built on the accumulation distribution. They work in exactly the same way on renko as they do on time-based charts, the indicators, but no flicker of change on the trend monitor, still keeping you in, still holding you in that position to maximize whatever you can out of this market, because these are the days you've got to make big money. Because if you can't make money on these days, you're going to be struggling on the other days, because the other days there's going to be small losses. You need to make some big wins out of days like this, and these are the days to do it. Just up onto the daily, see how that's shaping up. It's going to end up as a 2-bar reversal unless there's some major shift in sentiment late in the session, which happens. It happens occasionally. And, you get a wick to the lower body. Probably not on today's weight of fundamental data. And as Anna said, the bonds are key. Inverted yields. What do inverted yields mean? It's very simple, that shorter term interest rates, or the market perceives shorter term interest rates, are like to be more beneficial than longer term. So you start to see this inversion of the yield curve developing, and it's always a precursor. You've also got on this chart a very nice example of the accumulation distribution indicator again. This very heavy dashed blue line signals very, very strong price resistance at that region just above 26,000, 26,050. It's very strong. It's been tested several times. The more it's tested, it was tested over here the other day and it held. It keeps on holding and keeps suppressing the prices on the daily time frame. That is now adding some serious weight to this market, to the downwards direction. Below that, you've got a potential platform of support here at 25,500, but it's less well developed. The line's not as thick. It means it hasn't been tested so many times, so it's not as strong. And then, of course, you're right down to the VPOC again here on the daily. Okay, here we're going. We're still going down. We're down at another handful of points. It's just delivered. It's just wonderful to watch. It is wonderful. And to be honest, if I wasn't doing this, I'd be trading this very, very heavily right now. Let's head over to the tick charts. This is on the ES, exactly the same pattern. I love trading tick charts because, like a renko, it delivers momentum. You can see the speed of the market. You can see how fast this market's moving. The tick charts delivered off the Tickspeedometer. We've got 1597 over here. This is now 2584, so I'll just adjust that. It was higher speed than that. I've changed that down a bit. And up onto the 3 minute at 6765 ticks, so that's fine. Again, as I say, tick charts, I've got the tick charts and the renko. So you've got two non-time-based charts to work alongside your time-based charts. Bear in mind, we'd have this on multiple monitors. I have to get everything onto the webinar to show you everything in sort of one or two workspaces. But normally you'd have all this up, all of this will be visible to you simultaneously, and it would just help you enormously to stay in positions as they develop and maximize the profit. This is on the ES. What the renko optimizer does, it delivers the optimal setting for this particular index or whatever market you're trading. So you are trading at the correct setting for the renko brick. This is delivering 9 at the moment. That's off a 1 minute time frame. And what that 9 means is 9 units, in other words, 9 ticks. So what you're seeing on these bricks is the smallest price move on the ES is a tick. 4 ticks make 1 point. So you've got 9 ticks here. So basically 2 points and a quarter, 2.25 points in total. And that's worth a decent amount of money, even on one contract. So each of these bricks is worth serious money. And a run like that is big money. And if you've got multiple contracts, just multiply it by how many contracts you've got riding. Again, the trend monitor is bright red throughout, absolutely not a flicker. We've got the accumulation distribution running on here as well. You can see that it's breaching these levels all the time, going straight through, and it's just not stopping for the time being. Over onto the tick speeds, and what the tick speed gives you is several things. It gives you obviously the setting for the ticks charts themselves, which are down here. You can either use these numbers or the actual. The actuals change very, very rapidly. So when we're trading on cash and electronic running in parallel, personally, I will always use these because it means they change less frequently. Otherwise, we'd be forever changing the tick charts. So only a suggestion. If you're trading on Globex using the Tickspeedometer, then I would use the actual. If you're trading on the cash and Globex running in parallel, I'd use the closest number, the fib number here, which is the closest to the actual at that particular point in time. What it also reveals is activity in terms of the color shift here. When we're in green, we're in high activity. In other words, a lot of participation, a lot of activity. You see very fast moving charts. This is the average. You've got the volume here as well. And when we move into these red phases, that's when the market is a little bit sluggish. Participation is dying away. And it just gives you a heads up into what is going on in the market in terms of the activity. It also allows you to apply volume price analysis in terms of the relationship here between price and volume, overlaying that with trading off tick charts. So you'll get VPA signals over here, and you'll also see momentum revealed over here on the tick chart. So it's a blend of two perfect trading approaches, if you will. Just to go back to what Anna mentioned about the VPA on the slower time frames, let's just pull these up. Yep, that's the one. There we go. Now we've moved down to, well, the top line, we've got all three indices. I've got the YM on the left, I've got the ES in the middle, and over here on the right, I've got the NQ. And then down at the bottom, we've got 5-minute time frames just running along, as you've already seen. But the one that's interesting, and certainly I think the one we did the post on, was this one, the NQ on, I'll just pull that over a little bit, the NQ on the weekly. And what caused us some concern from a volume perspective was this candle, this very widespread up candle that we had on the previous week. But look at the volume associated with it. It just doesn't look right. This price action should require considerably more effort in terms of volume than is reflected here. And in order to arrive at that conclusion, you really only have to look at some benchmark candles earlier here. Not identical, I accept, but they're pretty similar. You look at these, you look at the volume. That volume is maybe a little bit higher than this volume even, and yet the price action here is perhaps 2/3 of this candle, maybe not quite a half, but you know, it's certainly that in that ballpark. And therefore, what that little analysis tells you is that there's something odd about this volume. It's not enough to drive this market that far. What you would expect to see on that level of volume would probably be about here somewhere, and yet it isn't, it's up here. That sets the alarm bells ringing, because it's signaling a market that the big operators are withdrawing from. And then you start to overlay other aspects. You look at the fundamentals. From a technical perspective, you look at possible levels. You've got a lot of volume sitting up here. You've also got some decent price resistance over here. You've got a level here just below 7,500. Not a hugely strong level, but a level nevertheless. And if this candle develops as it looks as though it will, with, maybe you can't see it, but you've got a decent wick to the upside here, and this relatively narrow spread body, depending on what the volume is down here, that may well be a precursor to, at the very least, not necessarily a V-shaped reversal, but certainly a reversal into some congestion away from this, what has been a relatively long-term bullish trend since the back end of 2018 up to where we are at the moment. So that was the candle I wanted to highlight there. Let's just have a look at the volumes here. Similar sorts of things on the other weekly time frames, but perhaps not so dramatic, if you will. Yes, you've got widespread price action here. The volume here is a little bit higher. Compared with that one, okay, it kind of looks all right. It's not quite, the differential between those two is not as extreme as on the NQ. You've also got to be aware of the fact that we still really haven't broken away from the volume point of control on the weekly for the ES, which is still pretty close. And up onto the YM in terms of the weekly, slightly different chart. That's partly because the Dow has been reacting more significantly to other factors, markedly, or more particularly the tragic Boeing events, which have had a huge impact on that particular index. And in addition to that, it's also there's also the impact of interest rates, and certainly banking and banking sector, how that's affecting the various markets as well. So that's why there is some differential in terms of the Dow, and indeed on some days we've seen the Dow down and the other indices up, which is unusual, but it happens. They don't always follow one another around religiously. What's interesting about this from a technical perspective is that we've got this very, very strong platform here, this blue dashed line. Now, if that's taken out today, it's testing it at the moment. It looking to push through there, but if that's taken out, then clearly that's going to act as very, very strong resistance for any recovery. So that's going to add some downward pressure to the YM. Let's just head back. Yeah, I'm just going to transfer over to Anna for a moment. I'll flick back to either the tick or time-based charts just as well as doing that.
One of the questions that we're always asked, and an issue that you're going to have to face as certainly as a day trader, is when you see some of these moves developing as they are now, what on earth do you do? It's particularly if you you've missed the initial entry. And again, this is where using a non-time-based chart and a time-based chart using some VPA, some volume price analysis signals will also help you. This is the 3-minute chart, and we can see here clearly that this move, although it started off much higher up here, as always, nothing goes down in a straight line straight away. It came down, it came to the volume point of control, you had a degree of congestion. It's interesting that the trend monitor has remained bright red. So you had an opportunity here as a breakaway, as a breakaway trader. Traders don't like, some traders don't like using breakaways from either a volume point of control, a congestion zone, because they have a very bad rap in the industry. Oh, you get a lot of fake outs, it's terrible, etc. But there is a huge advantage to using something like the volume point of control, which is the fulcrum of this chart, of this market, and that is you have a natural place for your stop loss. So any breakaway, your stop loss is going to be that much closer to that you will probably set it. So yeah, so if it's a fake out, well, so what? I mean, for example, here, if we go back to all these candles, where did it start to sort of, well, we had that one, then this one, then this one, then here we had this up candle with a reasonable amount of volume in it, but the resistance that's caused by the VPOC and the resistance from the accumulation distribution line will also help to put some more downwards pressure onto this chart. And you have to also remember, you're looking at this price action in the context not only of multiple time frames, but also what else is happening in other instruments in the market. We do find it. And where would you have put your stop loss? Well, you certainly know you're going to put it above there. Now, I accept that this one here, you had this this spike higher, but that's weakness again, and not a lot of volume underneath it to support that move higher. So your stop loss would be somewhere in this region above those two main resistance areas. Then you have again further attempts to pull away. Look at the volume under these candles though. It is beginning to rise. So if you like, selling pressure is beginning to enter this particular move. Remember, if you've missed all this from where the trend monitor is, it's still red. It's still showing that there is more potential to the downside. There's no sign of a reversal here. You do finally get a pull away, and you do get this really, really nice waterfall with rising volume. But this is the candle here, which is really interesting. Do you see this candle here with high volume underneath it, where you've got the effort to rise and then this pushback on high volume? That is always a great place potentially to think, do you know what? You're not jumping, you're not chasing the price at the moment on this move. You have made a rational assessment of what you see. You see rising volume. You see the price try to rise, and it's not back again. Volume is rising. We get to this point here. You do have a little bit of stopping volume coming in. I accept that. It goes up there's a little push higher. But look at the next candle again. You have weakness to the top of the candle, and again the next candle you have a down candle with rising volume as well, and it doesn't look as though this move wants to certainly come to a stop. There's not enough buying coming in to really halt the move lower and provide a serious option for a reversal. What we have on the renko here excuse me, some traders like to say, well, they don't like to follow the move down based on that candle volume combination. They like to see a pullback to a level and then perhaps enter. That's fine. If you're going to do that, just make sure that the candle on the pullback, the up candle, how can you check whether that's going to be is it a potential reversal, or is it simply that a minor correction, a secondary trend, if you like, in the primary trend lower? Well, you look at the volume. If the volume isn't there to support it, again, gives you confidence to join this move. I've also got the yen index here. That doesn't show any immediate signs of wanting to to slow down. I've also got the yen on the hourly chart here. This is the euro yen that we were looking at. You can see here it's very overbought, but it's still rising. You can see how far the overbought state can reach. This is the green line, this is the Swiss franc. So that still has some potential to push higher. Of course, you are going to get a snapback. You always do. And what you're looking for now is, when is that likely to happen? And what I've done is I put it on the Camarilla here, just to see if we're reaching some critical levels. We've gone through the S4. This is actually finally it pulled away. The S4, R4 are our key levels on the Camarilla. Where's it heading for? Well, it's heading for the S5. That's the first potential target. We've had this clean run lower, as we've seen on the 3 minute. This is on the 5 minute chart. So that's the first potential pause point there. Let's look at the hourly chart. These levels are refreshed, as I said, on a 24-hour basis. On the 60-minute chart, these are for the rest of the week. And in fact, it's where is it? It bounced off the R4 here. It didn't get through the R4 to go high. It's actually fallen. It's fallen from 7,530 to 7,300. That's a big fall. This is the candle I was talking about here. This huge candle. Can you see, with the big wick to the top, loads of volume underneath it? What is that telling you? That is going to carry on lower. That should give you confidence as well. Now we're reaching key levels. R1 is important. Then we get into what we call the buffer zone between R1 and S1. So you put all this together, and so if you've missed a move, don't ever worry that you can never join a move, particularly if it's such a strong move that we see now. Make sure you know where the levels are. Understand the candle volume combinations, and you can join a move with confidence, and you won't be chasing price. So there we are. I'm just going to keep watching it. It's great, isn't it, David? Yeah. David is sort of drooling at the moment. It's wonderful. I'll pass back to you. Is that okay?
Just sensational. Just sensational. Wonderful, wonderful, wonderful. Days to remember. Days to make big money. Days to dream about. You're going to switch screens. Just pull my screen up there.
I've done my bit, because that's it. We're almost done.
Okay, there we go. And as Anna said, it's not about chasing price. It's about getting in, deciding where your entry is. Are you comfortable getting in? Okay, you've seen this big move. Maybe you've missed some of it. Doesn't matter. Just, read the volume, read the price. Remember what the market sentiment is right now, and just check it out on volume. And if volume is telling you this market is going to go further south, then just get in and start making some serious money. In the time that we've been, or not even at the time we've been on air, the time we've been on air is just handfuls of points. But even since, where are we here? 1540. This is 20 minutes, for goodness sake. We've gone from 660 down to 5. That's 60 points. That's $300 on one contract. It's not bad for 10 minutes work. And that's what this business is about. And if you put multiple contracts on, then just multiply everything by 1, 2, 3, 4, however many contracts you're trading. I suggest you start with one. Making $5 a point is fine on the mini index. If you want to move up to the big down, that's fine. That's 25. And the ES and the NQ are obviously more than that. It's just fabulous. Just fabulous price moves. Just great. Yeah, you're going to get these corrections. Of course you are. But then it's down to you as a VPA trader to actually read them as whether there is sufficient volume associated with that reversal to actually mean that it is a reversal from a primary to a primary, or are you just seeing a secondary reversal against the primary and therefore the re-establishment of the primary in due course? And that's what you're always battling against. You can see it over here on 10 minute. We've got rising volume, falling price, very bearish. Yes, you're going to see a minor rally like this. Yes, you're going to see congestion phases. It's up to you to hold those positions, and you do that through using multiple time frames, by using indicators like the trend monitor, for example, which just helps to keep you in. You use the renko down here. I've reset this. This is on 19 now, so it's 1.9. This is on the Y. Sorry, I beg your pardon. This is on renko on. Get my words out, on the YM, for example. This is on 19 points at the moment. And on you go. Let's just head over to the tick chart, see what's happening on the ES. There we go. We've got a bit of a pullback there as well. The renko here, this is the one I reset. This is now set to 8. And that's the optimal setting. It's changed slightly. It was on 9, so we're now running each of these is on 2 full points on the renko. The tick activity has dried up a little bit because we're now running at 1597 on the 1 minute, 1597 on the 2 minutes, so this has come off a little bit. This is still running at 4181. So the participation is draining away a little bit. It's not as heavy as it was. In fact, I think earlier on in the session, the 3 minute was running at something like 10,000 ticks, which is more or less where it should be when you're running with high activity. Let's just go back to the time-based charts.
And if you're feeling brave, take a trade to the upside.
Yes, as Anna said, if you feel brave and you want to trade the reversals, then you take a trade to the upside. If you're holding this for the longer term, then you sit tight and wait for what will inevitably be a reversal, and you trail your stop. And if you get stopped out, fine, you've taken a big chunk of profit out of the market. You're quite happy with that. There's two ways to do it. You either trail the stop down and you let the market take you out, or you take it out yourself. But it's entirely up to you. If you've got a big move going and you've got a big slug of profit in there, then generally what we tend to do is move it in 2 stages. So you'll lock in a certain portion of that big move. So maybe, I don't know, 30% or 40% of it. So that's guaranteed. So you're trading with the market's money. And then when you get to these phases of price action, you might tighten that stop really close to the market, and because if the market takes you out in a reversal, you don't really care because you've taken a big chunk of profit. If it doesn't, fantastic, you stay in for the next leg down. So it's like a 2-stage process. We cover it a lot in the education course, which is for Forex, but a lot of that is also transferable to really trading any market at all. And really, that's the way to do it. So you start with your stop loss, obviously in a loss position below or above the market. You then move it to break even, where you can't make a loss. In other words, pretty much where you got into the market. If the market then develops a big move, you'll lock in maybe a third of that move or 40% of that move, something like that. You'll leave the stop loss nice and loose. And then if it carries on, you really tighten it up and maybe lock it into a 10 or 15 point stop where you get taken out on a short-term reversal and the market takes you out. You're perfectly happy because you've taken a big profit out of the market. That's broad brush.
Right, the S&P is actually down 46.
Okay, S&P is down 46. Let's just go back to, I've got the indices running as well. As I say, you'd have all of this up. There we go. This is on 5 minutes, so pretty quick. That's the euro on the right-hand side. This is the yen index, and you can see how bullish the yen is, and a lot of yen buying. Not seeing any major reversal in the yen for the time being. And this is the dollar index. That's pretty bearish. I'm seeing some decent selling on the dollar on that chart, and that's the euro, which has been absolutely crushed today across the complex. Sorry, were there any questions? I've got my chat box closed. We're okay?
That's it. I'm just looking at the pullback on the NASDAQ and
okay. That's back to the 3 indices again. I've got the weekly across the top here, if you remember. And down here we've got the 5-minute charts. You're just seeing this this minor reversal for the time being. back to let's go back to the time base. There we are, back on the YM again. Got a 2-bar reversal here on 3. Seeing the reversal on the renko. As I said, you see the trend dots transition. They're going to transition into maybe grey or maybe blue. But this will stay red for the time being until, if and until, this develops into a true reversal in trend, in which case it'll go to the transitional colors and maybe straight through to bright blue, if indeed that happens. It's on the daily. We've now taken out all of the gains of yesterday, so we've now got a big bearish engulfing candle developing, overlaying yesterday's price action. The reason these volumes are not filling is because I've got this closed off to fill on completion of the bar. You can change that on NinjaTrader. There you go. Now it's filled. The only reason I do that is because I've got a hell of a lot of data coming in, and I don't want to slow the system down too much. So I tend to have that closing off. Otherwise, you can have it building in real time, which is what I would do normally. But for webinars, where we've got so much data coming back and forth, I'll have it closed off. So it'll only fill on the completion of the candle or the price bar. Let's just have a look at the 30-minute. Okay, getting deep into this light volume area on the volume point of control. 10, let's change that up to 15. Just gives you a different perspective all the time. No great sign of any buying under that candle. Increasing volume under that candle. Looks like just a temporary pause point for the time being. Pivot to the upside on 3. Back to the tick charts. Just have a quick look and see what's going on in terms of gold in a minute. Not that you'd need to trade any other market with this going on, but let's just have a quick look. Yeah, we've got gold running up. There we go. Again, I've got gold. I've got 5.15. I've got 30-minute. I've got 30-minute down here as well. Let's change that to the daily. Bit of a struggle for gold at the moment. It's desperately trying to break higher all the time, but really just gets capped away all the time. Can't really sustain a rally. It's trying to break away from the volume point of control. There's some resistance overhead at 1320. If we could ever get up to this level, and I think we did a post about this last week, if we could get through this region here and into this lighter area here, then it's got a chance of going 1350 and on up to 1400. And if you look at the longer term charts for gold, it really is interesting. The channels they've created, the strength of resistance that is in place. I think from memory it's around $1,400 per ounce. Don't quote me, but I think there's a post on Anna's site about that. It's just a struggle, and it's just been in congestion for years, and it continues to remain range bound. At some point it will break out, and there are very, very strong technical levels in place. One of the biggest problems for gold right now is that there is really no inflation anywhere in the world, and that's one of the big drivers for gold, is a safe haven for inflation.
If the dollar goes up and there's enough fear, then you'll buy it.
Yeah, if the dollar goes up and there's enough fear, then they'll buy it.
Can I just move over back over?
Yeah, sure. Let's just move. I'll move back to Anna, and I'll say cheery bye for now. and leave you with that very, very, very pretty picture.
Brilliant, thank you. Okay, I just wanted to go back onto the 3-minute NQ chart at the moment, because it really is developing into, as I said, the type of price action that you to see whether it's you have a potential re-entry, you have a potential entry, adding more positions. You've got a little pullback at the moment, and you see here we have this bullish engulfing candle on this here, a reasonable amount of volume. Then we've had the next candle. Look at the volume. If that is going to be a big reversal, you're going to need a lot more volume than that. Then we have this candle here. It's got a wick to the top of the candle. Not a huge amount of volume, but the weakness is there because you have the wick to the top. And in fact, it created this resistance here at just over just under 7,410. The accumulation distribution indicator fires off in real time as levels are built. They're built in real time as well. So this sort of minor sort of pullback, if you like, has, you know, it was stopped dead with the development of this little down candle with, you know, reasonable volume underneath it, also has triggered the pivot. So we know we're either going to go into a period of consolidation in this at this range from where the this level was triggered, because it was hit from coming from below, which is why it is red, and the support and resistance here from the VPOT. These lines here are support and resistance through the prism of price, time, and volume. Now, what's interesting with this candle is that you've got volume. There is volume coming in, but we don't know whether that's going to end with the wick to the top of the candle, which would tell us that there is further weakness to come. But the levels are very clear in terms of, you know, whether the primary trend is going to carry on lower. And, you know, the chart is telling you, VPA is telling you what is likely to happen next. And I just thought it was a really nice example of how in a pullback, in a correction from a primary trend, is it in fact a reversal from primary to primary, or is it just a secondary trend? Sometimes the secondary trends that you see here, this is just a 3-minute chart, maybe you see on an hourly chart, on a daily chart, they are tradable. There's enough in there to be able to take a trade, but you know that, you know, you're aware of that. This is a 3-minute chart, and what we want to know is whether this move that's to the downside is actually going to continue. Well, the levels are very clearly denoted. They're there for us, and in fact, it's also picked up on the renko. Obviously, we've got price action, but we don't have any volume with the renko, and I think that's really one to watch and see how you know, the little VPA lessons that you have in the candles that are being formed at the moment with the volume profile underneath, whether that is going to carry on lower. And also, because volume price analysis is not just candles and up down volume, it is also the support and resistance. And we have support and resistance from the accumulation distribution indicator, we have support and resistance from the volume point of control, and then we also have support and resistance from the Camarilla. And actually on the 60, we've got this this candle looking like we've got wick to the top of the candle. Where is that heading? Well, we have it here. We have the R1 here, where it's you know, we have a clear price objective, as it were. And certainly sometimes it doesn't get there. Sometimes it overshoots and then sits there. We don't know. We'll have to see what how the rest of the session plays out. And certainly, you know, this is the end of the week. You'll have a lot of traders closing out, good, bad, or indifferent. And, you know, we'll wait for the weekend, and Monday is another trading day. And heavens above, in this country, Lord knows what's going to happen. Apparently it's not happening on the 29th, is there? There's an extension with all sorts of but we don't know which extension. 12th of April, 7th of May, well, it's not the 22nd. It's quite ironic actually. The 6th of May is the celebration of VE Day, which is the end of the Second World War, and how ironic that it's we are talking about Brexit at the same time. Anyway, thank you so much for coming along today. I hope you've enjoyed what we've covered, and explained a little bit more about volume price analysis. With regard to the indicators we've been using, they have been from the NinjaTrader platform. They're actually from what we call our essentials range of indicators, whereby it's all the indicators except the ones specifically for Forex. And here we are, the essential indicators you can find here. Cost of the indicators is actually 1,221, but they're actually discounted down to 749. And you can pay outright for the package, or you can pay on EPP and over a 3-month period, and you do get a 7-day money back guarantee. But you don't have to buy all the indicators. You can buy them on an individual basis, and all the details are at quantumtrading.com. So David, anything else you want to say? That's it. Here David is waving goodbye. Have a great...
Red is my favourite colour.
Apart from red is his favourite colour. Yeah. Have a wonderful weekend, and we're back on Tuesday with the London session. It should be fun. And we'll catch you then. Take care.